Welcome back everybody, your typical bull here, and it has been a little while since we have made a video. I've been fairly busy at work and in a location where service isn't the greatest, but we are back, and we're going to talk about a pretty simple setup, and it's one of my favorites. What I'm getting into is the bull flag and the bear flag. It's a very, very common day trading setup, and it is
Bruh.
also pretty easy to recognize and even easier to trade and make money. So as we can see, we're looking at a 1 minute chart of the S&P 500, and we got our trusty dusty VWAP here, and we are going to add a couple of more indicators to this, and those indicators are going to be just a few exponential moving averages. So if you click here on the indicators tab right here on Webull and click edit, find EMA, we're going to use the 9, the 21, the 50, and the 200. Some people like to use the 10, the 20, the 50, and the 200, which is pretty much going to give you the exact same results. Me personally, I like the 9, the 21, and the 50, and the 200 myself. My 9-day EMA is blue. If you want to change the color of that, you just click this drop down box. My 21 EMA is red, my 50 EMA is green, and my 200 EMA is yellow. Pro tip here, once you get these set, leave them that way forever. You don't want to change the colors all the time because then you'll just confuse yourself. You'll be like, oh, I can't remember what color, what EMA is that, blah, 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 blah. Just leave them the same color, no problem. Right, so what are we looking for here? So there are a couple of different types of tickers, right? So you have your low floats, you have medium caps. So generally on your larger stocks, you're going to trade bull flags and things of that nature differently than you would trade if you were looking into, like, let's say 5 million float penny stock, right? They're going to function differently. So what is a bear flag? And this is an example of a real life trade that I took today. So what you have is a nice leg down, steady trend, and then you get sort of a push back into these averages, or a flag. It looks like a flag, right? It pushes back into these averages, and then what you end up getting is this looks kind of like a flag on your chart, and this is going to be the way you trade this with these middle cap, like normal size companies like your AMDs and your SPYs and your things that aren't low float momentum penny stocks, right? And let me just get a pen out here and I'll just draw a few things on this chart.
It's like
So
watching an
this is
artist
a
create
bear
a
flag. It's going to be a
masterpiece.
fairly simple to understand setup, and it's what you look for is this pushback into these averages. This is any of these averages will work. And generally, though, you won't be flagging off of the 200, and that's just not something that normally going to happen. So what you'll end up doing is you'll look for a flag off of one of these averages. In this case, the 21 and the 9 and the 50 are relatively close together. So what you get is a nice clear rejection of these averages, and then you break down from this flag. So what you end up with is a trade with an entry here and a risk here, and then you could just ride this trade until you break these averages again, which is around in this area. So what you also can do is scale out along the way as normal, right? So if you enter here, risk is here, and then you end up down here, take half of your position off, and then maybe you end up down here, maybe take another quarter of your position off, and then you start making some new highs and breaking these averages, maybe exit the last one quarter there, right? So there's just different ways to go about handling these trades as well. So that is a bear flag. It's a pretty simple setup. There's another type of flag that we'll look at as well if once we find one, and it's basically kind of the same but slight differences, right? So let's go see if we can find a bull flag here, or just some different bear flags, of course. So what I look for when I'm trading in these situations is the 200, specifically for a bear flag. I want the 200 all the way on the top. I want the 50 underneath that, and then I want price underneath of VWAP, right? Because that's downtrending, your bearish under VWAP, and you've got your basically several other confirmations, right? So if those things are in line, generally as well, what you want is 200, 50, 20, and then the 9-day essentially can do whatever it wants. But if those three are in a line, and sometimes, right, like the 20 will pop above the 50, and that's fine as long as they're generally close together, because when your averages are lined out like that, it's basically signifying the trend is strong. Once you get averages that start flattening out and coming closer together, right, what ends up happening is if this average gets start faring away from that, what happens is it's signifying to people that the trend is possibly reversing, right? So you end up with a reversal play as opposed to a flag play, right? So it's a fine line kind of between that a bear flag and a reversal, right? So same kind of story here. Little flag, flags back up, poof, right here, breaks down, nice little trade. And it's a very common, easy setup, right? See here, everything's lined up, 250, 21, 9, and then flags back in, rejects that average, and then breaks down again. And then same story in this area. This flag is a little different and not quite as clean, right? But here you sort of pop down, and this is more like a double top even than a flag. So but then when it actually does significantly break down, if you're looking at, you miss, let's say you miss this, like normally you trade this and you miss that, you can wait for a flag back into these averages right here, and then a breakdown from that flag, and then you get another entry, boom, and then scale out half, ride, and then sell the rest of it. It's a pretty simple play, right? I'm trying to find a bull flag, and eventually we'll get there. We've had some pretty bearish days on SPY. Here's a good one. So this is the other kind of setup I want to talk about. This one is a sort of a flat top breakout as opposed to a true flag, right? So what you get is this push up, and then you get like this flat kind of top here. But you flag down into these averages. So there's two entries here, and the safer entry is the one that I recommend you generally take, right? So there's actually three ways to trade this, right? So you have this little flat consolidation. It pops up, consolidates flat, and then it breaks out. So you can take an entry down here at support with stops below, which is fine. You can take an entry at the breakout, or you can take an entry at the next retest and then just ride it until it breaks these averages again. So figure out how you like to handle that yourself. Me personally, it's on a case-by-case basis depending on how the day's doing, right? So if we're in a strong bullish day and I see this, we're consolidating, and we get sort of this little flag play here. As soon as that pops out, I'm taking that, but I'll probably get out there like completely, right? This first red candle, that's a little scalp play, and then when it comes back, I might get back in and retest that as support. I might just get back in there. Same thing, right? See, I don't know why that changed to a highlighter, but same thing, 200, 50, 21, 9. They're all lined up. We're using these averages as support the whole way up. Alright, let's look at a few more here. Let's go to a different ticker. Let's use AMD, right? So here's a pretty good bear flag right off the bat for AMD. We pop down. This one's a little bit of a longer consolidation period, but the whole time flags into these averages, breaks down, and then poof, it's gone. So some of them take longer to work out. Here's one. This one is a much quicker flag play, right? So poof, this one flags right down into the 9-day, and then it immediately pops up. And if you look down here on volume's stronger, pops right back up, consolidates, exit in this area. Alrighty, moving right along. Once again, bear flag, flags into the 20, breaks down, confirms, entry, and then this would probably be exit 1. You start making new highs, and then doesn't close above the 20, 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 and then it continues down and follows these averages all day. So exit at the end of day for a very nice gain. So in my personal experience, right, the best flags happen when everything is lined up, right? Here's another flat top breakout, sort of flag play here. There's actually two of them right here in a row, right? This case, you're underneath of your 200, right? So using what we've learned in our other videos, like our VWAP videos and things like that, we know the 200 is a strong resistance, and we can see that actually happening here, right? So this is the 200 average. But the 50s, the 20, and the 9 are all lined up for a good solid trade, right? This is kind of where a little discretion comes into play. So what do? Do we wait for another setup and just not take this one, or do we take a quick scalp play from here, exit half at VWAP, or exit the whole thing at VWAP? Because that's a good trade, 104 to 105. That's a dollar price target. As soon as you break over that 200 on this strong volume, that's a good trade. But it's one of those discretionary things. You take it, you don't take it. That's something you'll have to figure out for yourself. But shortly after that, we get sort of another play. Boom. Another consolidation. Flat top breaks out, consolidates for a minute, pops over again, and then starts making new lows. So that's another good trade right back to back there. Couple of bear flags here. Nice downtrend. Flags back, breaks down. Good lows there. Flags back again to VWAP. Breaks down. Flags here again. Breaks down. Flags here again. Breaks down. So anyway, now, okay, so I feel like we've kind of got the mid caps. This works on 5-minute charts, it works on 1-minute charts, it works on any time frames, it works on daily charts. Exact same concept, right? Break up, flags to averages, pops back over, entry, stop, exit, 5-minute candle, make a new low. You'll get less setups on a daily chart or on a 5-minute chart, right? Same story here. Breaks down, flat consolidation, 5-minute candle makes a new high, exit. So these are very, very simple setups, and I love them. They are absolutely phenomenal. Great trading setup for day trading. Okay, here's the last one we'll look at, and then we'll go look at a different kind of ticker. Flag here, breaks down, 5-minute candle makes a new high, exit. You see, this is a super easy trade, and it's amazing. Underneath the VWAP, 50, 20, 9, 200. Great trading setup. Okay, so now let's go talk about something different, right? Let's look at low floats. So the issues, let's just use Mullen, right? Mullen is a very popular low float. So the setup is the same. This is more of a momentum trade than it will be anything, right? So if you go to any of the top gainers on the day, it's going to be the exact same story. But with these low floats, the most important thing of a proper flag is volume on the breakout. See, this is partially the breakout, but when does it run? It runs when the volume comes in. Boom. And that's going to be the same way on any of these tickers. Down, up, does not matter. When does it run? It runs when the volume comes in. See, because this technically is the breakout right here. But it's not doing anything. Why? There's no volume. Volume. It's still technically a flag play. Entry is a little bit different. This is also a flag. Still got heavy volume. And then this huge volume spike here. That's where it ends. So entry at $1.21, exit at $1.45 probably. Good trade. So same concept on these low floats, but volume is going to be much more important than it will be. All right, so keep that in mind. Go watch our other videos, the VWAP videos and the day trading specific videos, how to find watch lists, because generally bull flags are going to show up more prominently on your in-play tickers, but any trade whatsoever, any ticker, doesn't matter. Bull flags, bear flags are going to be great trading setup to take for nice, very clearly defined risk to reward ratios and very clearly defined trades, right? So with that being said, we will see all of you into the next one, and I hope this helps. Cheers.